It is a huge market for investors on many different levels and for many different reasons. And the big distinction there is the things that were converted to condo have a 95% investor-owned base, and the project were built for condos still have a huge investor base, sometimes as much as 50% for a number of reasons. So it is still a very large investor class property group.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, there's some crazy things going on in the state of Florida right now.
Well, there are a lot of things going on, from all kinds of laws being passed and insurance requirements, and it's almost become
sales tax and insurance pricing and condo laws, and there's all sorts of changes that have happened this year.
It's kind of become a minefield, you know. When I think of them like in Ukraine, you've got to gingerly step through all these different things and really understand what you're doing, because if you don't know what you're doing, it can make a big difference in your investment outcome.
Yeah, and you know, I think that most of our listeners are saying, sales tax, what does that have to do with us? Because most of our listeners are going to be residential investors, not commercial investors. And that's even on the multifamily side. I consider that to be residential. They don't collect sales tax. There's no sales tax paid on dwellings, residential dwellings in the state of Florida. But on the commercial side, retail, industrial, office, there is. So those are changes that we've seen happen this year. It's been occurring, but throughout the last 3 to 4 years, I guess, maybe longer than that. I think it goes back to Rick Scott. Regardless, there's been another big change that will take effect on December 1st. So, I mean, it's a big deal. Condo, we had this collapse of the condo in Sunrise. Surfside.
Which sparked a whole lot of new investigation and introspection, and things are going to change in the condo industry. And, you know, people tend to when talking of investment properties, people often don't really think of condos because intuitively, that's where people live. But actually, condos are a huge part of the real estate investment in Florida.
Yeah, that's something I learned speaking to our guest, Steven. I didn't think about investors flooding into condos because I just assumed that most investors have a fear of condos because you have this unknown cost associated with the condo associations and challenges in getting remodeling done and whatnot, because there's someone involved in the process besides you. So my feeling, erroneously, was that most investors gravitate towards single-family homes, multifamily and commercial, and stay away from the condos. But that's not true. So that's interesting. We're going to learn some of that and some other things going on in the condo market. We got a really great guest today, Steven. But before we get into the guest, we want to take a few moments to read a review. Mama Epps says, as someone who is a recent transplant to Florida a few years back and switching my real estate portfolio from out west to Florida, I have found the interviews insightful, accurate, and worth my time listening. Keep up the great work. Hey, Mama Epps, wherever you are, we really appreciate that. We appreciate all of our listeners that leave reviews. And we try to tell people every time we read these that this plays a big part in us being able to book guests, because when potential guests are researching us, they want to see if people are listening and paying attention. And so these reviews are terrific. They help us a great deal. It takes a lot of time and effort to produce this show and to book guests. And so anything you guys can do to help us is greatly appreciated. Mama Epps, we appreciate you. We appreciate everybody who's done it so far. And if you haven't, if you would be kind enough to consider leaving us a review on the iTunes store or on the other methods that you could leave on your podcast player. We will read them and we'll talk about them. And it's very helpful for us. Stephen, other housekeeping items before we roll into our guest?
No, let's roll in. It's an exciting topic today. Today we have with us John Cadden. John is the managing principal of the Condominium Advisory Group. After graduating from Boston University with a bachelor's degree in accounting in 1984, John joined Continental's equipment leasing division in the Workout Group. Later on, he took a position at the commercial real estate banker with the Friedman Group in Chicago. In 1988, John formed Century Funding Corporation to provide commercial real estate banking and real estate investment services to third-party real estate developers and investors. After a decade of heading up Century Funding, he joined American Invesco as Chief Investment Officer in 1999 with the primary role of overseeing acquisition financing and ongoing real estate operations of various condominium and mixed-use developments. Under his tenure, the company acquired and developed over $2 billion in real estate projects. In 2008, John formed CF Capital Holdings. Since its inception, they have provided asset advisory management, restructuring, and consultancy services to the condominium development, multifamily rental, and single-family for sale housing industries. Such services include determining optimum repositioning of assets that had gone insolvent during the economic downturns, many of which were condominium conversions that had not sold completely. John, welcome to the Invest Florida show.
Thank you very much for having me. I appreciate it.
Yeah, John, we really appreciate the time that you're investing with us today. Condo is sort of an outsider's class and I mean that not in a negative sense. It just means that most of our investors ask us about single family and multifamily investments and some commercial, but we don't hear a lot about condo. So I'm assuming that there's not a lot of density of investors in the condo market. Is that accurate?
It is a huge market for investors on many different levels and for many different reasons. And the big distinction to make is, in Florida especially, is the difference between multifamily properties that were converted into condos and those that were built as condos. And the big distinction there is the things that were converted to condo have a 95% investor-owned base. And the things that were built for condos, the project were built for condos, depending on where they are and what the price points are, still have a huge investor base, sometimes as much as 50% for a number of reasons. So it is still a very large investor class property group.
Wow, that's kind of shocking news. The first time I've heard that today, that the investor class is so large with condominiums. I guess it would make sense, right? I mean, you do these conversions and they're trying to dump as many of the product, most of the product in the market as possible. It's already a finished deal. And with the emergence of Airbnbs, I suppose that makes a lot of sense.
Well, I think it predated even Airbnbs, and there's a lot of condominiums that have exclusions for Airbnbs operating at their property, and there's leasing requirements that prevent that. But really what happened was when condominium projects were being converted to condominium, investors from all over the world, South America, Europe, China, were buying properties here. And investors here were buying properties, and there were programs to rent the units for them, and the returns looked good, and there was guarantees for a couple of years of rent and whatnot. And in the high-end world, you go down to Miami Beach or Palm Beach or Dade, Broward, and Palm Beach County, and a lot more up in Tampa and down by Fort Myers and Naples too. Those oceanfront condominiums, there was a lot of money moving into those for people who could afford to buy them and just hold them and not even live there, and some rentals too. But especially people moving money into the U.S. because remember, we're still the best place to invest in the world. We're still the safest place. So you're a very wealthy South American investor who's moving money out of the country from Argentina or somewhere like that. You're going to buy a $3-4 million condo on the beach and just hold it.
I mean, so many things for us to talk about here because you just got my brain spinning. There are so many in terms of, first of all, we want to talk about investors, foreign investors, because that just changed in the state of Florida recently. But we also want to talk about, I think, to get started before we move on from, is condo a good investment or not a good investment, or they're involved or not involved in investors in condos. Well, obviously they are, and I was mistaken in believing that they weren't. But I think when folks are getting into condos, if they're not experienced, they might not understand the restrictions. And many times there are restrictions in terms of what percentage or number of units can be leased, the time period they can be leased. What are some of the other things, John, that investors, if they're getting into the investing in condos, that they would have to be cautious of? And then we're going to loop back to the foreign investors, because that's changed this year.
So just before John answers, that statistic he gave really blew my mind. When you're talking like 90% of investors in condominiums, we really have to rethink the way we look at condominium development. It's actually more looking like at rental opportunities. But if there's so many investors, there must be compelling advantages to investing in condominiums. Much more than I would have thought, because I always thought the assessments and the maintenance and everything else would be a detriment.
Yeah, and I mean, for me, I've owned condos and I've lived in them, and it's always been I've never thought about it as investment class, because there's so many restrictions. And like the two ones that jump out are the percentage, the number that can be leased, and then the time. But I mean, I'm interested to see if John's got any other things in there that investors might need to look out for in the condo docs that might trip them up.
Well, I think the first thing to look at is the financial condition of the condominium property that you're going to be investing in. And unfortunately, when someone lists a condo on the multiple listing service, there's so much action and so many people looking at those units that a lot of times the buyers that ask a lot of questions aren't the ones that get the attention from the selling broker. And I don't want to cast shade on a selling broker, but look, you put a condo on the market and you get 12 phone calls right away. They sell pretty fast usually. And especially up until interest rates started going up, they were going out the door as fast as they got on the market. So if someone's asking a lot of questions and you don't need to answer them because you got 5 other buyers sending you offers, you don't have to answer them. And the most important thing is to understand the finances of the condo association, their reserves, how much work needs to be done there. And those are things that just don't come off the multiple listing service so easily. And it's not required. You have to dig in and find that from yourself. Yeah, they can give you the financials. And yes, you can go visit the property and look around and see for yourself. But so many of the buyers just don't. They just look at the price and they calculate the rental and they say, okay, well, the taxes are this, the assessments are that, and I've got a tenant paying X, and they don't look into sort of what it's like to be a rental landlord. You have unit turns, you have repairs, you have replacements. So those are the things that people tend not to look at as hard as they should. But all that's kind of changed in the last couple years, because think about an investor-controlled condominium. When you have 90% plus, 95% investor owners, they're going to be on the board. They're going to control the operations. They're going to be the people running it, and not the owner-occupants, because they just don't have the voting block to get voted in. And so what is an investor's goal? It's to keep expenses down and revenues up. So a lot of condominiums were operated on a kick the can down the road method, if you know what I mean by that.
Sure.
And suddenly we had a collapse in Surfside. But actually, let me dial it back a bit, guys. In 2008, the market crashed, and condominium conversions were selling at all-time high prices. Some of these units in garden apartment complexes built in the 80s and 90s were selling for $300,000, $350,000 for a 2-bedroom, and suddenly 70%, 80% of these investors were walking away from their deals because they couldn't make the debt service. Everything was the values were crashing, and investors swooped in and bought at very low numbers blocks and blocks of these condo units all over Florida. And so that changed the paradigm from the conversion days to the post-crash days. And so some people might have bought a unit for $50,000, $60,000 that was selling for $250,000. And when you're renting it out for $1,000 a month, it's a pretty good investment.
Yeah, it's a good investment. But John, let me just stop you there because I don't want to assume that all of our listeners understand what a condo conversion is. Condo conversion is, it's a rental apartment, and they basically turn them into fee simple condo units, and that's a conversion, correct?
Correct.
Okay.
And there's statutes that follow what you have to do under the Florida condominium statutes. You have to notify all the residents who are living there. The renters have a first right of refusal. But in those days, maybe you were lucky if you got 10% of the existing residents to want to buy it at the price that the market was going for at the time. And I'll give you an example. We were doing condo conversions at American Invesco. We did a property in Florida, in Orlando. One of the properties we did in Florida, we did several, which is 408 units in Orlando. And the word gets out. We've notified the tenants, and then we notify the public that we're having a big selling event. We'd have a party. We'd rent a ballroom out somewhere. But every broker, we encouraged co-brokerage, offered very nice fees to brokers who brought in deals. And then suddenly, and this was at the beginning of internet days, I kind of call it, in real estate, our property would be on 1,000 brokers' websites in Florida. They would just put it on there and get it out to their client group. So in the first night at that party, we would have a contract on every unit and a backup contract on every unit in one day. All investors.
Man.
Now, they didn't all close, so it sounded great, but then you had to weed them out. So 50% of the first group wouldn't close, and you had to replace them with the backups, and then 50%. So you were selling all the way through. You sometimes had to find 3 or 4 contracts to close a unit, but you got that first 50% done in the first 60 days, closed.
Jeez.
It was a free-for-all.
Yeah. That's the go-go days.
Yes, we're hoping they come back someday.
All right. We always, when we're in it, we think it's the norm. We take advantage. We take it for granted. And then when it's the go-go days are gone, you're like, man, I thought that was going to go on forever. It doesn't.
Yeah, we'd like to talk about it and tell the same stories over and over again.
It's funny, and I'm just going to get off track here again. I know we're kind of meandering here, and sometimes that's the best type of conversation. But the conversations I've been having with folks recently, I'm sure you're familiar with these conversations. The interest rates are up pretty significantly, and that affects real estate, and real estate slows down when you in terms of transactions. And I've had now 3 conversations in the past couple of months of people wanting to sell, but the market's a little slower now. There's not as many buyers in the market because the interest rates don't make the deals make as much sense anymore, and they're saying, well, I'm just going to sit on it because it's going to go up, and that might be the case. But if you're not using it, you're going to, and it's just vacant. It's just a cost center for you. It has no value for you unless you're going to rent it and actually get a return off of it. But it's interesting that it doesn't matter how many times these bubbles and busts in Florida happen. People consistently believe that it's going to go on forever. They forget about 2008. They forget about 2000. They forget about 1992, 93. They forget about all those things. I mean, John, I'm probably dating myself. You're probably a younger guy than me. Certainly, I think we're both younger than Stephen, because there's very few people that are older
just behave
than
yourselves.
Well, let's put it this way. While I was in college from 1980 to 1984, prime rate was 22%.
Yeah, crazy.
And you could get a CD for 14%. So I was jaded from that. Came out of college going, what do you mean rates are going down?
So I'm trying to understand now, if these condominiums are really controlled by investors, and, we've had some real serious events in Florida, like insurance has gone crazy. I mean, you really have contradictory aims, because the investors would want to keep costs down and the homeowners would want to immediately do repairs and do all those things. Like what's going on in Florida now?
Oh, the insurance is a mess for sure.
Well, things are slowing down, and when you look at every county and statistics on listings, and I follow condos more than I do individual houses, but the transaction volume is significantly reduced. Prices had been climbing from 2018 on up pretty steadily every month, and it's hit a lull. And the amount of transactions, and you guys brought up a good point. A lot of people are saying, well, I'm just going to sit. And my kind of answer to that is, well, maybe you're right, maybe you're wrong. When people used to ask me where I thought the market was going, I told them I had an ex-brother-in-law and I lent him my crystal ball, and when he gave it back to me, it was cracked and never worked again. So I can't give you an answer. You're either going to be right or wrong. But nobody really knows for sure. And like you all, you could find, I always say to people, give me either side of the debate about the economy, what's happening right now, and I can defend we're hitting a recession, we're going to have a boom, it's not going to do this. There's data to support every position by tons of different economists. So the answer is you have to do what's best for yourself and hope for the best, but none of us have the answer.
Yeah, it feels to me like, investors, when there's really two income streams that they look at. The one is just the income stream, but the other one is the proceeds from sale and appreciation. It feels to me like condo investors have mainly focused on the appreciation aspect, just holding them. So, because expenses are pretty high. And, it could be a change now if prices stop increasing like that.
Well, I think that's true, and that's what's. I think when you buy a condominium, you're looking for some cash flow. But again, in the conversion product and that strata, we're talking about generally $250,000 and under, maybe $300,000 and under. But the sweet spot's between $150,000 and $200,000. So you have a lot of cash buyers, a lot of investors that are paying cash. Namely, you can't get financing. One of the things about these high investor concentrations is you're a non-conforming loan. You're non-warrantable, meaning Fannie, Freddie, FHA, the veteran VA loan. None of that's available. Banks don't want to touch it because it's all investors. So you have a lot of cash transactions. And people are looking for a return. They don't want to be negative, but they definitely are looking at the long run hold. And that's at a pause right now because prices are not to say it doesn't happen in some areas. There's still oceanfront properties and things that just continue to go up. But your run of the mill garden style condo conversion apartment building is very slow right now. And with the new law and statute coming in where reserves are suddenly, you're no longer going to be allowed to waive them. And by the bill that it was passed a year ago, SB 4D, and then the reconciliation bill, they called it, of it, SB 154, you have till the end of 24 to get they call it an SARS, a Structural Integrity Reserve Study. But you have to get a reserve study for everything at that property, and whatever that reserve study says, you have to start reserving for. So if it says you need $400,000, $500,000 a year, and you haven't been doing that, which the majority of the condos have been doing, if they're doing anything at all, they might do half of that or none, or they voted it down so no one's assessments went up. They're doing it now, and it is going to impact value significantly to maybe a couple $100 a month to more.
I owned a condo in South Beach 30 plus years ago, and we had an engineer. It's the first property I ever owned out of college. And we had an engineer come in and do a study. And let me tell you, it was an eye-opener for me. I mean, this is an older building. It was built in the 60s and during the last boom in Miami Beach. And he came in and he basically said, you've got water intrusion into the support beams, and you're going to have to do this and this and this and this. So it's sort of a foreshadowing of what was happened in Surfside several years ago. But I'm sitting there with, big eyes, and he's like, well, if you start now and you do this and this injection and you do this and this and whatever, it's going to cost $2,000 or $3,000 a unit and, whatever. So, I asked the question, so if you treat this, is this going to solve the problem? And the engineer just looked at me like I had three heads, and he said, do you know where this property's built, right? And I'm like, yeah. He says, it's right on salt water. And there's constantly, and there's water intruding, salt water intruding underneath the barrier island underground where support beams are and whatnot. When you buy here, these units never should have been built. I don't care what it is that's built over here, never should have been built with these pylons that are stuck in here. It's going to be an ongoing maintenance issue forever, like serious maintenance issue forever. So it was an eye opener for me to say, just not against condos. It's just about the fact that, you're going to build these things in areas that are highly corrosive, subject to a lot of storms, and it's going to be a lot more costly to own in those areas because, you're going to pay for the view. I mean, you really are. But in terms of the reserves, that's a big deal for investors that, all of a sudden they're buying something they think is pretty cheap, and they step into a situation where, my gosh, you're going to be reserved for 30 years of them not doing that in the past. And so this is has to be reported now, right? Like the deferred maintenance. And so these are another one of those items that investors should be looking at to make sure that is either being reserved or there's a plan for getting reserved for these items. Is that accurate?
Yes, that's true. And then there's a second report that has to be done if you're 3 stories and above, and initially it was if you were within a certain area of the ocean, but you have to do your milestone reports. If your building's 30 years old now, you have to do a new milestone report. So basically, we're talking about the end of 24. Well, here we are, it's July. 18 months is far away if you're a third grader, but for us adults, 18 months goes really fast. Right. And it's going to be upon a lot of boards. And the other side of the coin is there's only so many providers who can do these studies. It's not something that exists where there are a lot of people who do them, but they're now being swamped. So
sounds like a business opportunity for somebody.
It is, but you still got to get licensed if you're not here in Florida already. You got to get set up, and then the structural. They call it a structural integrity reserve study, but you have to actually do your milestone report, which is a true structural study down to the foundations and the things you were talking about, the pylons and whatnot. You're going to have a lot of engineers that are just not going to want to do it because if they're wrong and some
liability.
Yeah, so you've got all that. And then now, if you don't do these things and it's reported to the authorities, it's reported to the state, but when you have those major structural issues, those are going to get reported to the municipalities. And that's the other thing the engineers have to do. Not so much on your reserve study, but on your structural milestone studies. All that's going to be it has to be reported. So everyone's going to report it. If they're saying, listen, you got a problem or you've got a violation here. And for the reserve studies, if a condo board doesn't do it and doesn't collect reserves, we don't have a state enforcement agency, but any one owner can make that report, and then the board members themselves will be liable. And I think you'll see a lot of reporting if they don't do it right. The other side of this is we talk to boards all the time. That's our focus is trying to work with boards and give them options for solving these potential financial crises. And people treat us as if we're trying to create fear and we're trying to create a situation at their properties where maybe we're trying to buy it or we're trying to force prices down. And the reality is we're not. We're just telling them the truth. And you know what it's like being the messenger. So sometimes it'll take 2 or 3 different people, their attorneys, us, outside people telling them, management company, no, this is true. But a lot of boards don't want to listen right now. They really don't like hearing this. It's scary.
So distilling what you're saying right now, I mean, I would have to think if I'm an investor and I own like some of these older units, and I've got 18 months in which all these reports have to be done, and I know there's going to be something coming with heavy expenses and responsibilities, I would start to think about selling now, just getting those things out of my those condos out of my portfolio. At the same time, the converse of that is if you're a buyer, like, I guess you have to pay really detailed information to the financial conditions that are given now and see if you think there's going to be additional reserve requirements, but the actual part about the structural, you won't know for about 18 months or so.
If you're in a high rise or over a 3-story building, the 2-story, well, they say if you're 3 stories and over, you've got to do the structural. I wouldn't worry. You have to worry about it at any property, but it's the high rises near the ocean that I would be especially scared of and want to know the most. But even a 3-story garden apartment, you should know that the chances away from the ocean of it having structural issues is going to be based on how well it was constructed or how old it is. I mean, something built in the 60s or 70s anywhere could have potential issues. But as you get closer to the modern age, you hope it's not as bad. But certainly you take a Surfside building where they had, if you went into the parking garage there, you would see exposed rusted rebar and concrete spalding that you could see with the naked eye. That's pretty obvious. And that would raise my concern. But on the especially the conversion product, where it's almost all investors, what we're telling folks is when they hire our company to come in is we do an analysis of everything. And what's been happening recently is that some of the properties are actually worth more if they weren't condominiums anymore, if they were turned back into rentals. So in other words, deconverted. And we're recommending that when the numbers work. And with our experience and being involved for this many years in real estate and the financing of it, we're able to get good underwriting and say, look, you may be selling your condo for $160,000, but if this was a terminated project, it might be worth $200,000 to you, and that's your out because you're passing along. The multifamily owner is buying it subject to all the things that need to be done there, and they're not facing the same metrics.
Restrictions.
It's easier to operate a 300-unit multifamily project than it is 300 separate condominium units with, you may have some multiple unit owners, but sometimes there's 200 different owners renting apartments. So you could have the exact same one bedroom, and one guy bought his for $40,000, and the other bought his for $110,000, and the guy at 40 keeps his rent low so he can keep the place going because he's already made his money back, and the guy at 110 wants to get the highest rent, but he can't because the competition in that project. Whereas if you have one landlord with one interior standard, and again, as you know, in multifamily properties, all the interiors generally start out the same. What you do is you do your value adds and you bring them all up to a standard. It's a lot easier to rent and get the higher prices when you're not showing someone A, B, C, and D quality units all at the same property.
Right. Let's talk a little bit about the rule that was passed in March from the federal legislature, because I know our South Florida investors are going to be interested in this. A lot of South American investors, a lot of foreign investors, a lot of Chinese investors, Venezuelan investors, and these folks are going to be affected by the rule that was just changed. Have you studied this enough, John, to be able to comment on it?
Well, I know enough to be dangerous, and what I would say is a lot of it depends on how you titled your property. If you titled it in an LLC, it's a lot easier to do the reporting, and it's a lot easier to track things. If you titled it in your own name and you're a foreign national, you just have a lot more work to do. And I don't think it's horrible, because I still think these people are going to want to bring their money here.
Well, wait, they've banned from certain Chinese, for example, can't buy real estate in the state of Florida at all.
Well, that is there. Yes, if you're talking about this, that's a state, not a federal ban.
That's state, correct.
Yeah,
Correct.
and first of all, I don't know if you read this morning, it was challenged in court.
It's been
yesterday.
challenged. There's numerous lawsuits challenging it.
Yeah, but it's kind of coming to a head, and again, it had very specific. Broadly, you could just call it a Chinese ban, but if you look at it very specifically, it had location aspects to it and
Type of asset, right?
Type of asset. So to the run-of-the-mill investor, I don't think it really matters that much. You're not going to buy a house next to a nuclear plant or whatever it is. But I think it has a huge effect. It makes a lot of noise, but I'm not sure it affects everybody that you think it will. And I think it's a lot of window dressing, if you ask me, to make good politics.
Right. It's political nonsense.
Yeah, but again, but I don't think it's going to have a huge effect because, again, when you really read the specifics of that act, and we don't even know if it's going to be upheld. But if I'm a Republican governor, that's the kind of stuff you pass to appease your base.
Yeah, I mean, basically, the complete ban on Chinese buying anywhere, and then there's other countries that it's farmland near nuclear power plants, near military facilities, this sort of thing, which is not that big of a deal, as you say. But certainly for the Chinese, you can't buy anything right now. It's against the law. We're in the middle of a contract that might come undone because it's a REIT, and 3% of the share classes are sold to one individual Chinese, and we're going back and forth right now on de minimis rules of the transaction, of whether does anybody really care. This is a passive investor that has been in this private REIT for years. I mean, he's not trying to circumvent the law. It's just it's ridiculous. But anyway, again, it's politics. It's political posturing, and hopefully it goes away. Some of it makes sense. Some of it is just nonsense.
I'm going to digress a little bit. So I worked at Continental Bank, which was the largest bank in Chicago at the time.
I interviewed there out of college.
Yeah, I went there, and I was with the Continental Illinois Leasing Corp division, and Continental Bank ran into some financial trouble, and they actually sold it off in pieces. It was a bank failure of its time. But our company got sold to a Japanese bank called Sanwa Bank, and and the program I was in got discontinued, and so I left and went into real estate. But a lot of people were concerned. It was in the mid 80s and 84, 85, 86, 87. Before the Japanese economy collapsed, the Japanese were buying everything. I don't know if you remember, they bought Pebble Beach, the golf course, for $1 billion.
Some absurd number, yeah.
Yeah. So the Japanese were buying everything. And I don't remember why. I was at some event downtown Chicago at a lunch event, and a guy was speaking about international investing. And he looked at everyone around the room and he said, for all of you who think it's bad, you're wrong. The best thing, and I kind of mentioned this earlier, the best thing about being in the United States is everybody wants to invest here. And when they don't, that's when you should worry. Until then, let them bring every dollar they can to put their money here because we are the safest place on earth. And I've lived by that for 38 years since I heard that.
Yeah, and this is why when you see infringements like this from the law that's passed, I understand it's not as detrimental as it appears on the surface, but still, I'm with you. The foreign investors pulled our rear ends out of the fire in 2009, 10, and 11. There were counties where 75, 80% of the transactions that were going on were foreign nationals supporting the price. What would have looked like in Florida in 2010, 2011 if there weren't German and Brazilian and Venezuelan and Canadian investors in here in mass supporting the prices? It helped us recover very, very quickly, and they were in here buying aggressively, which is good. It's good for our economy, good for the state, good for having further depression. And so these kinds of laws, to me, I just don't like them because I see what foreign investors have done in the past for Florida, and I don't think we want to remove them.
I couldn't agree more. We are a world economy, whether anybody likes it or not. But it sells well, when you're going into those deep red states where they don't have foreign investors coming in. I mean, I don't want to disparage any particular state, but I think we know the ones we're talking about. They don't have a lot of investment. They don't have great economies like Florida and other states, and they love hearing that. They think, oh, yeah. But because when those areas do get growth, you go into Montana, and now people from California for years have been buying up all the scenic areas in Wyoming and all that kind of things. The locals complain, but as an economy, it's doing great things. It does hurt the people that are there. The other thing I want to get back to about all these condos is when we deconvert them and we turn them back into rentals, and there's a statutory process to do that. Again, when you talk about 90 to 95% investors, you're not kicking people out of their homes. The renters all stay. No one wants to buy an empty building, so they assume the existing leases. And these homeowners that are in those condos, what you find is that a lot of them have been trapped. And you buy a condo, you're not expecting to live in a rental community. You're living in a rental community. Every year or two, you see 50% of the place turn over, and you feel different. And the homeowners the people that live in their homes feel better than the renters. They think they have more rights, and they think because they actually live there and it's their home. Whereas my feeling is, listen, if you were leasing a home or you own a home, it's your home. Where you live is your home. Following the rules is another story. If you're in a community that has rules, you got to follow the rules. But I don't differentiate between anybody, whether they own or they rent. It's your home. It's where you live. It's where you raise your family and your children. You retire to. So that's also another contention. So I find that a lot of these homeowners are glad that they have a way out, that they're not going to be spending the money, that they are maybe going to be able to move to a community that is more homeowner occupied. And a lot of these people are happy. It's the opposite of what you'd think. No one likes to move, but a lot of people have just done nothing because what's the hardest decision to make in life? It's to buy a home or to move. I don't know how else to say it. I hate to say it like this, but moving sucks.
Yeah. 100%. Well, let's just kind of summarize a little bit here. We covered there were two rule changes that you wanted to talk about, and we want to talk about the foreign investor. I think we've done those things, have we not?
Yeah.
Okay. And is there anything else that's kind of coming down the pipe right now that, John, that you want to let our listeners know about?
Well, I think what's coming down is what we don't know. We don't really know when the insurance markets are going to change. It's been a horrible year for every kind of insurance in Florida. And I suppose you guys heard, 2 weeks ago, farmers pulled out. Yeah. I don't even know who's left.
John, we just did a podcast with a very knowledgeable guy on insurance we just came live this week. It's fascinating. I think you might want to listen to it because the statistics were pretty stunning, some of the things that he talked about in the state of Florida. And the reality is a lot of this stuff can be fixed. People will immediately say it's storms. Storms play a role, but it's not the primary driver here. It's Tallahassee.
I've been reading the articles every other day. And I follow some folks on LinkedIn that are insurance experts, and they write about the government. And what's ironic about it, again, is I don't like to get too political, but Republicans are known for small government, Democrats are known for big government, and yet Florida has jumped into the regulatory world.
Yep.
Like the investor world, the insurance world. So, again, most Americans, it all gets back to what the news media likes to call the kitchen table issues. And our politicians really don't like doing that. And they don't like talking about someone sitting in their kitchen and saying, wow, my homeowner's insurance went to $6,000. It was $2,500. That's
true
huge.
Story. That's true story. That's exactly what's going on right now.
Yeah.
And the politicians in Tallahassee, and I've said, I don't care whether you vote Republican, Democrat, I don't care. But you need to ask your representatives, do you understand this issue? And if they try to gaslight you and say that it's Democrats' fault, because Democrats don't have any control in Tallahassee. If they try to gaslight you and tell you some sort of nonsense, like I saw someone who blamed woke. Stephen, I got to be careful saying this because we're regulated by the guy. But the chief financial officer of the state of Florida said it's woke. Come on, man. You guys control the entire government. It's not woke. It's you're unwoke if you don't fix this problem because someone's going to put you out of office. So I don't care where you vote. I don't care. What I care about is if this is a big issue for you, ask them the question. If they lie to you, vote them out. If they try to gaslight you, vote them out. If they're ignorant, spend the time to try to give them the data they might not have access to. And if you think they're salvageable, vote for them. I don't care. But just make sure they're not lying to you and they're not gaslighting you. And that's what's going on right now.
Yeah, and if you're an insurance company, you're able to charge more, and you're doing it on the back of a storm and government regulation. You're loving it. Wait till you see their profits next year.
Yeah.
Well, but the insurance companies, Florida has the highest number of, like 90% of the lawsuits against insurance, of the fraudulent claims are happen in Florida, and so. I mean, I can understand the insurance companies having a reason to raise their prices because of that, because we're not regulating that. But anyway, for that, we have to listen to the podcast on insurance.
Yeah, I look forward to listening.
Yeah. I have one question that I just wanted to ask you. I think you mentioned that like one of the new laws is that board members will now have liability in condos. I mean, that
haven't they always had liability?
Do they have personal liability?
Well, here's the difference. You always have a fiduciary obligation as a board member. You absolutely have certain things. You can't steal. You have to use best business practices. Now, there's always disputes in the past where someone would say so-and-so is not doing the right thing and they're doing it to line their pockets, and sometimes they catch people doing that. But there's a business judgment, as in all businesses. Listen, you make the wrong decision, you didn't do it on purpose or to line your pockets. But the difference now is if you don't follow these requirements under this SB 4D and the SB 154, and you knowingly don't take reserves and you don't follow that reserve study, you're personally responsible and you could be found personally liable. That is a big change.
And that's a huge thing for a board member in a condo because, all these little old ladies fighting and getting into things which, I mean, I always thought of boards being composed like that, of all people who had nothing to do and were retired and just wanted to spend the time. But it doesn't kind of fit with what we just learned, that most of them appear to be investors who would be more financially astute. But now they're going to have to step up to bigger responsibilities.
Yeah, and again, I think all these stereotypes have been around a long time. But I think there's another important thing to know, and you asked what should people do if they're buying condos. You want to get meeting minutes. You want to try to see as much information. But here's the thing, and we operate some condominium. When we own units in a project, we'll take on the management of the condominium. We don't do it for third parties, but we still own a lot of condo units in Florida and have bought and sold a ton. But when you look for volunteers to be on a board, you take like a 336 unit project and there's 5 board members and we put out the annual call for candidates and you don't get any. So the 5 existing board members, if they want to stay, you don't have to have an election, they're in automatically. When we have board meetings and an average condo size of 300 owners, units, you might have less owners. When we have board meetings, you might get 6, 7 unit owners to come to the meetings. And they're even on Zoom now. So pre-COVID, none of these things were on Zoom and people had to come in person. So none of the investors who were out of the country or out of state came. But you can come by Zoom, and that makes it a lot easier to attend. You still don't get attendance. The people that attend usually have a specific issue that they care about. And if they can't get it done, sometimes they'll want to run for the board. And they have one issue in mind when they run for the board that's germane to them. But people are just not involved. Now, when you have a a building that's been around a long time and it's mostly homeowners living there, you'll get a lot more board participation than you will. But in the investor deals, your participation in meetings. Now, when you send out, in the past, you had to send out, depending on what your condo declaration said, you had to send out a notice to waive reserves. And you have to take a vote. And let's say the vote required, typically it's 66 and 2/3, 2/3 of the people to vote it. You send something out to someone saying, listen, we have $1 million worth of work to do. We're going to do $1 million special assessment. Everyone's going to pay $3,000 or whatever, and you can pay it in over 12 months, and we're going to do this work, but we need 66 and 2/3 of you to vote yes. What do you think happens? You don't get the vote. Right. You put that same vote out to waive reserves, and the votes come. People don't even vote when it's to special assess themselves. But you put it out there for waiving of reserves, and guess what? You got that vote as soon as you could get it out. People would immediately vote yes.
Mm-hmm. But now they won't have the chance. I mean, the choice.
It's over.
Yep, exactly. It's over. It's going to be forced on them.
Yeah.
John, we've taken enough of your time today, and you got a beautiful day in Chicago with a beautiful view. You need to get outside and enjoy some of that. But before we let you go, why don't you tell us a little bit about who you're able to help and what kind of business that you're looking to grow your practice with, and then give us your telephone number and ways that people can contact you.
Okay, so Condominium Advisory Group is our consulting arm, and we are looking to get to the boards and to some degree the management companies, but the board members who really are in charge. And we sit down with them and we look at all the factors that are happening right now at their property, the ownership makeup, the reserve problems that they're going to be facing, how to get the reserve studies done. And we analyze it and try to come out with the best possible plan to alleviate the burdens that are coming to them. Some properties, it might be do the work and you've got enough funding and you can do this work and you can live through it. And others, it's going to be, this one works better as a rental. Let's go through the termination process. And we plan for that, where we shepherd them through that process and work on a contingency fee basis to get that done. It's a complicated process and takes a lot of work and time. And that's basically our main focus. But we definitely come in and do an analysis of where you stand today and what you're facing in the future, and what are your options to come out in the best possible way for your community and the owners.
And did you tell us what the best way to reach you is?
Well, the best way to reach me is to call me at 312-890-3338. We also have an Orlando office is where we office, and I'm back and forth. I come down a couple weeks a month. My partner's down a couple weeks a month. And we have about 30 people on staff, including Spanish speakers, which is very important in Florida, as you know.
Sure.
And we've done several condo terminations. We're in process on others. We're working with several boards now. And it's an education process. We are educators, and then we're problem solvers.
John, this has been terrific. It's been insightful. I've learned a lot from you. We don't have the opportunity to speak with a lot of folks that are involved in condos. We probably should do more now that we realize how prevalent condo investors are with condos. I mean, obviously this discussion is going to be of interest to a lot of our listeners. So we definitely appreciate your time, sir.
Well, thanks, guys. It's been great. I've enjoyed talking with you, and anytime.
Thanks a lot, John. Great talking to you.
Take care. Bye-bye.
Bye.
And that was John Cadden talking condos, investments in the state of Florida. We haven't had someone talking about condos in a while, Stephen. It was enlightening for me. What were your thoughts?
So it was very enlightening, because since the Surfside and people started looking at condos, there's going to be big changes in evaluating condos as an investment. And, for instance, if condos don't have enough reserves as will be required, it's going to have a huge impact on not only the residents but the investors. And I can tell you a story about that. My wife teaches fitness, and she just had one person who told her that they have to cut back on their training because their condo fees are suddenly going to escalate so much because they had not had adequate reserves. And so it's going to affect people's basic living, because if it's affecting that, it could affect food and all other things also, but certainly the return on investment.
And no question about it. And it was an eye-opener for me because erroneously I thought that there weren't a lot of investors in the condo market. I mean, I don't know how I could have been so blind. It makes a lot of sense that that's product that's coming available, particularly in the condo conversion arena, that it'd be easy for investors to scoff up and to get rental if you could make the numbers work. And so that was enlightening for me too. I think we probably need to spend a little bit more time and attention on condo investments in the state, because it seems like it's a really large asset, a group of investors, Stephen.
Yeah, but also what I learned out of this is it's really time for buyer beware, because if they're people that have condo investments and they know that their reserves are inadequate, the next buyer is going to be hit with those. And often buyers just don't pay enough attention to the association documents and the balance sheets and
make sure it's properly reserved.
Exactly.
Or you might be paying for the last guy.
Exactly. And so really be careful. Now, on the other hand, if I was one of the residents or an investor in one of those types of condos, I'd be trying to sell now. And, you always hope that there's a greater fool. But it's
Stephen.
No, listen, I'm just calling it like I see it. It's something to really be aware of and guide yourself accordingly.
Guys, John was a great guest, educational. We always love having great guests on the show. And Stephen, where can our listeners find other great guests?
Well, the best place to go is www.investfloridashow.com, our website, and also download the app so you can listen while you're mobile or on the road.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.